If you stick with me for the next 10 to 15 minutes and pay close attention, I'm going to give you the 6 entry triggers that you need to know about. Here's what you are going to learn. Number 1, the 6 types of entry triggers that I'm going to show you here. So I categorized this into 3 categories and 2 for each. So 2 candlesticks, 2 chart patterns, and 2 break and retest. And I'm going to show you how to do this correctly, right? So first of all, the correct way of using these entry triggers is using what is called the TAE formula. So the T is meant for trend, and A is for the area of value, and then E is for the entry trigger. So for you to enter into the market with these entry triggers, you first need to understand the trend of the market, the area of value of the market, and also what are the entry triggers. The entry triggers is what I'm going to teach you in this video. For you to see the trend, you just need to know the direction of the market. Is the market moving up, creating higher highs and lower highs, higher highs and lower highs? You just know that the market is in an uptrend until the market starts creating higher lows and lower lows, higher lows and lower lows. You now know that the market is now in a downside direction, right? In the area of value, what is the area of value? The area of value is these zones where the market reverses on. If you understand first, the market is in an uptrend and we are on an area of value. Now I'm just looking for an entry trigger to buy and then continue the uptrend when the uptrend continues, right? So first I'm going to show you 2 candlestick patterns entry, right? So there are 2 candlestick patterns that I like, that I always enter the market according to. So these 2 candlesticks are engulfing candlesticks and hammer candlesticks. So take a look at this candle here. We see that the first green candle here opens at this point here and closes at this point here, right? It's a bullish candle and it have momentum going up because it's green, it's bullish. The closing is above the opening, right? And then what happens with the next candle is you see the market opening down there and then closing down there. Now this market was going up, but now you can see that this market is now going down, and the close of this candle is lower than the opening of the first candle, which means the momentum of this second candle have exceeded the momentum of this first candle here. So once you see this happening, this is where you will be selling. So this is where on the open of this one candle here, so it opens right there, you will be placing your sell order, right? So once you sell there, you expect price to move down, right? So here you can see an example. We can see that the market is creating a trend line right there. Market touches, second touch, first touch, second time, or the third touch. What do you see? The first candle is small, it opens below, it closes above, is small, and the second candle opens there, closes below. First, you know this is on the area of value. The market is going down because we are seeing a series of lower lows and lower highs, and on that zone here you see a bearish engulfing candle. This is where you will be selling, and then you expect price to go down, right? So let me show you again another example. Here we have a market which is in a strong uptrend right there, right? And then we see the market breaking past this zone. I will show you the break and retest strategy. You see the market doing this pull back, breaks past, now it's pulling back into this zone, which is a zone of area of value, because the market have reversed on it before. Now once the market comes into the next zone here, what do you see? You see a bullish engulfing candle, because the first candle opened right there, closed below, and then the next one opened right there and closed above there, showing a huge momentum going up. So here you were going to buy at this point, and then you put your stop loss below the bullish and or bearish engulfing candle, and then you take profits 3 to 1, 2 to 1, depending on what you have on your trading plan. So the next candle that I want to show you is called the hammer candle. So the hammer candle looks like this candle, which is right here. candle right there, you can see that on this candle, if you look at this candle, you can see it looks like a hammer already. And why do the hammer candle shows as reversal? The hammer candle shows as reversal simply because of the long wick that it have. So if you look at this candle, you can see we opened right there, and then we have market moving up to this point here to create a high, right, to create a high. And then we see the market moving further down to close even below the opening price, right? So it shows us towards the end of this hour, of these 4 hours, or of this day, depending on the time frame, there was a lot of selling. Now with this candle, we might not want to just sell because of it, because it's just one candle. You want to confirm, is the next candle coming up a red candle again? If the next candle comes up as the red candle, you will be selling at this point here. And then you put your stop loss above, and then you take profit. It depends on your risk to reward. Right there, you can see another one right here. The market have been moving up to this point, and once it reaches this top part here, you can see that we have the market which opens right there. It went all the way to create a high, and then it reversed back down to close it near the open right there. And then the next candle that follows shows as momentum is going now to the downside. Now we would be placing your sell order here and your stop loss above at this point right here. So this is how you trade the hammer candle. But make sure before you place a trade, make sure the hammer candle is on an area of value, right? For example, you want to see your hammer candles on trend lines, right? Like this. Once you see this, you want to be seeing a hammer candle on trend lines, or also you want to see your hammer candles on support and resistance levels. So if you see a hammer candle on support and resistance level, you want to be placing the trade, because you know that this is where the market is likely to reverse on, right? So just like what has been happening right there, we see that this is an area of structure because the market have been reversing to this zone here, and now you are seeing a group of hammer candles here. So you were supposed to place your sell order here, and this big candle that came down should have given you some profits. So let's move on to the next entry trigger. So the next entry trigger that we have is the double top and double bottom patterns. So this is the example of a double top. You can see the market moving in an upside direction here, and then you can see that at this point here the market creates the first top right there. So the market creates the first top right there, and then the next thing that you see here is the market moving down and now up again, right? So it creates the first top here. Now it created the second top here. So this doesn't have to align perfectly, but you can see that this is the same zone that we have here. So the market will always go a little bit up or down of your zone, because the market is created based on human behavior, right? So it won't be a very perfect zone. So you need to know that the first one here, the second one, now you see the market dropping, right? What are you waiting for here? Is you are looking for this market, for this zone to be broken. If this zone is broken with momentum, like with a huge candle which comes up here, the next thing that you want to be doing here is, once the candle closes, make sure you wait for the candle close so that you can see that does this candle have momentum. If this candle doesn't have momentum, this candle right here, do not place a sell trade right there. Wait for a pullback. But if it have huge momentum, sometimes the pullback will not come. So what you need to do is, on the start of this candle here, you sell at this point, and then you'll be putting a stop loss above this momentum candle, and then you take profit 2 or 3 times the risk that you are risking per trade, right? So this is called a double top pattern. You can see it's a reversal pattern. It shows you when the market is about to reverse. So the double bottom looks like this. First, you see the market moving in a downtrend direction right here. When the market comes to this point here and reverses here, you are paying attention to this zone right there. And then you can see that the market moved up again, started reversing, and once it started reversing, you are backing out this line as your another level of structure, right? But if the market breaks past this zone here, you simply know that the trend is continuing. But what if the market comes to this zone and reverses? Now you can see that this zone here might act up as a neckline, so you are waiting for the candle that breaks out. So if the candle that breaks out here, you have got a big huge momentum like this candle right here, it simply means that you just need to buy soon after it breaks out your neckline. If it doesn't have momentum, do not buy right away, wait for a pullback. But if you had momentum, you need to be buying right away. So you buy there, you put your stop loss below that candle if it have momentum, then you buy here, you put your stop loss here, and you take profit anywhere above right there, right? So if I zoom this in, you are going to see that this candle, you have got momentum. So I was talking about this candle right here. So it breaks past this zone but with momentum. So this is a big candle. You can see that it creates a small pullback after that, and it moves up. This is the fourth entry trigger. Let's move on to the fifth entry trigger that we have today. So the fifth entry trigger that we have is the break and retest, right? So for the break and retest, what I'm talking about is we are looking for a market which is either ranging, and then we draw a support and resistance level. Once we see a breakout, we are waiting for the market to retest into that zone and then continue going up. As simple as that. If we were in an uptrend like this, we will see a pullback. What you want to do is mark out this zone right there, right? So always when the market reverses, you need to mark out the zone where it reverses if you are trading this strategy, because for the next time, once you want to see is if the market reverses from here, it might be creating a double top for you. But if the market breaks past, it simply means the trend is continuing. But you don't just place a buy here, because we have one confirmation. What we are waiting for is the market to pull back into that zone, and at this point here, you'll be placing your buy orders, expecting this zone here to act as your resistance and push prices higher. So we have the break and retest of support and resistance. We also have what is called a trend line break, right? So let's say in a trend line break, we are looking for something like this. So let's say the market is trending like this, and you are drawing your trend line which connects this zone here. The next thing that you are looking for is the market to break past this trend line. Once the market break past this trend line right here, most of the time it will reverse either back to the trend line or back to this zone right here, or this zone right here. So these are two zones that you are looking for. You can see the market breaking a little bit to this point and go down, or it will break up to this zone and then go down. So both of these places, you are looking for any weak rejection candlesticks. If you see a candlestick which is being rejected to go up, then that's where you are going to be placing your orders. So let's get into the market and let me show you the break and retest strategy in place. So first of all, we said we can see a break and retest of a trend line. This is one of the best break and retests that you are going to see, because once you get a break and retest on a trend line, the move that you get after that is going to be bigger. So let's say you have the market which is trending like this, right? We have your trend line connecting number 1, number 2, number 3, number 4, and now we see the market breaking past this trend line. So the next thing that you are looking at is for the market to reverse back into this zone right there. So this zone here, or back into the trend line, right? So let's see what happens next here. We can see that the trend line was still continuing, and then we see the market reversing back into the trend line. And so once the market reverses into the trend line, what do you see here? You see a bearish engulfing candle, confirming that the market have now completed the break and retest. Now it's time to be selling, right? And so once you sell here, you can get a lot of profit, because the market will move from this point here down up to this zone here. So once you sell here, and you put your stop loss right there, and you put your take profit down below here. So you were putting like 2 to 3, 2, 3 or 4 risk to reward ratio, but stick to 1 to 2 or 1 to 3 risk to reward ratio. So for you to see a lot of breakout break and retest examples, you need to zoom out your charts a little bit and see more candles, because once you see this, you can see that okay, the market have been moving down here, but it have been reversing at this zone here. If you look at this, you can see that we have a zone where the market have been reversing on. Also here we have another zone here, so the market have been moving in support and resistance. But once it breaks below support at this point right there, what's the next thing to happen? If I zoom out there, the next thing to happen is the market breaks and retests into that zone. And once it started retesting, you can see this candle here. We didn't talk about this, but this is called a pin bar. It shows indecision. You can see long wick to the upside. Let me zoom out again. You can see we have a long wick to the upside, long wick to the downside, followed by a huge black red candle showing momentum. So here you are going to place your sell order right there. Your stop loss in this case you want to put above the retest candle that you placed, or on this zone here, right? And then your take profit would be 2 or 3 to 1 risk to reward ratio. In this case the market moved down, but realistically you would have taken profit maybe at this zone right there, right? So this is another entry trigger that you need to know. First of all, market should break the structure, pulls back into the structure, and then you sell. If it breaks to the upside, you want it to pull back into the structure, and then you buy. Those are the 6 entry triggers that you need to practice and start using in your trading today. If you want to learn more about entry triggers, more about how to place your good trades in the market, how to manage your risk, how to grow as a forex trader, make sure to subscribe to this channel and join our Telegram group. I'll put the link in the description below. Thank you, and I'll see you in the next one.